Welcome to Breaking Banks. Welcome back to Breaking Banks. We have two friends of the show joining us today. Matt Dooley, he's the Fintech and Customer Experience Executive who's driven change at two of the world's top banks and often a host when we have Asian topics. Matt, welcome back to the show. How is things at Connected Asia?
Oh, everything's going well. We're really bouncing back from COVID. We've got zero local cases at the moment, so fingers crossed. Let's hope the remainder of this year is a positive one.
Well, as we record this, I'm about to head back to from Bangkok to New York, and the thought terrifies me. Going back to the US right now, but anyway. But of course, Katie is there, so that's why I'm heading back. All right. We also have joining us Ben Quinlan. He is the CEO and Managing Director of Quinlan and Associates. But Ben, I thought what we'd do to introduce you is play a quick clip that you did from the HK UST TEDx talk on creativity back in 2018. Here's Ben Quinlan talking about creativity on TEDx.
I remember one of the incidences that I ran into is the old firm I worked at was divided in different practice groups, and I was in the corporate and institutional banking practice group. But then a project was sold for a big bank in IT and CRM, customer relationship management strategy, to develop the whole new CRM tool. The partners came to me and said, Ben, all of our IT managers are completely staffed out. Can you lead this project? And I was like, I said, look, I have trouble with Google and Facebook, so this is going to be a bit of a disaster. And they said, don't worry, don't worry. Just you have the lead partner there, you do the strategic thinking around it, and we'll support you with the technicalities. So I was like, right. So we flew to the client, and I remember the first meeting. I was walking with the partner, and we're walking to the meeting, and it was with the head of IT, chief technology officer, 15 enterprise architects. I don't even know what these things were. And right before we go in, the partner gets a call, and he's like, yeah. Oh, okay, hold on. Hey, Ben, I got to take this. Can you start the meeting without me? Excuse me? I said, absolutely not. He goes, yeah, you know your stuff. So he put me in that room, and I just made sure I delayed all the introductions as long as possible. Very nice to meet you. Oh, this is my business card again. Nice to meet you. Went around the table, and I was with one of my consultants with me who also didn't know anything about this subject domain. So we're sitting there, and the first thing is, oh, look, Ben, it's really good to have you here for this project. We know you've got a lot of experience in this area. But before we go and look at the CRM strategy for this bank, can you just give us your 30,000-foot view on some of the key data architecture issues here are at this bank? What? Yeah, and I literally, creativity, right? Thinking on your feet. These are the tricks of a management consultant sometimes. So I said, well, data architecture is a very big term, I can lecture you about it, for hours. Why don't you be a bit more specific and focus on something that maybe I can give you some tangible advice? So then he starts talking, and the second he starts talking, I lean over to my consultant and I said, give me the client's presentation. So he hands over the client document, and as he's talking, I'm just nodding and yep. And I'm flicking through all the pages, just trying to grab at anything. And eventually I see this thing, Murex 4.1. So he finishes off his sentence and I go, all right, so for example, your Murex platform. And he goes, yep. And I said, I imagine you're operating a 4.1? And he goes, yeah, that's right. I go, have you thought about upgrading to a 4 point? And he's like, 4.2? I go, yeah. One of the guys in the room was like, that's what I said. Wow, this is like disco lighting. This is great. One of the guys was like, this is what I said. And I go, really? Well, you keep going with what you're saying. I literally just worked this room for an hour just people constantly making statements and me repeating that statement. That's a great idea. Oh yeah, I agree with Tim. That's good. John, excellent point of view. I left the meeting and the head of IT came up to me and said, mate, brilliant. You're a genius. I can't wait to work with you.
Okay, so Ben, welcome formally to the show. How are you?
Cheers, Brett. Very well. Recovering from tonsillitis, but otherwise still have my voice intact, so it's all right.
There you go. Well, you also mentioned in that clip that you're a stand-up comic in your part-time. You're the son of a celebrated musician and a former Hong Kong model, but you ended up being a stand-up comic and a banker. So what are the commonalities between banking, finance, and stand-up?
I'd say, to be honest, at the end of it, it's just about reading and understanding your audience. Stand-up, I would say, is the best form of communication on earth. Live, reactive, real-time, paying attention. And if you can work a stand-up room, a boardroom, in all honesty, is a piece of piss. Yeah.
Well, I often my brother did a bit of stand up actually. I've thought about playing with it, doing a fintech stand up routine. You and I can talk about that offline. But
Sounds good.
So you did. You've worked on a report most recently with the Fintech Association of Hong Kong, looking at what you refer to as the VB landscape. This is not VB that Matt and I are used to.
Victoria Bitter.
Vitamin
I'm
B.
Australian too, just to be clear. I know that VB. Yeah.
VB. But you're of course talking about virtual banking.
Yes.
And so the Hong Kong Monetary Authority has now issued 8 virtual banking licenses. Am I correct?
That's correct. Yep.
Now, Matt, just before we jump into the report, can you give us a bit of sort of perspective here? You've been involved in the Fintech Association since its foundation, of course, but you've been in Hong Kong for 20 odd years now. And so you saw the before and after of the HKMA sort of recent changes, including the virtual banking charter that was set up and so forth. Because, I've talked about this on the show before, but it'd be good to get your perspective. The HKMA, the Hong Kong Monetary Authority, which is the primary regulator, they weren't always so keen on fintechs, were they? They definitely in the early days when China and Singapore were both firing in respect to fintech, Hong Kong was a little bit more circumspect and tended to favor the incumbents. Would you say that's accurate?
I think that's totally. I think the HKMA has been a very prudent kind of regulator and really strong regulator. And I think that's one of the strengths of Hong Kong is that it's well regulated. But for 150 years, the little territory of Hong Kong has been the in and out of China. And it's taken goods into China, but also taken goods and services outside of China. And they see a real opportunity with fintech because when you look at the epicenter of what we think in global terms for fintech innovation, and it's not Silicon Valley anymore, it's actually what we call the GBA, which is the Greater China Bay Area. And that is really the home of, it encompasses both Shenzhen, Macau, Hong Kong, and about 15 other cities. And really, when you look at Tencent and WeChat is just to the north of here, 20 minutes to the border and then across. There's a lot of innovations that are happened in China, and how do you bring that innovation out? And I think that's a real opportunity that the HKMA actually saw. So I would actually label that they've created a fintech tsunami, and that tsunami really started about 5 years ago. So in 2016, they really launched a supervisory sandbox. But as you said, Brett, it really focused on the incumbents and trying to get the incumbents to actually play with innovation in the sandbox. And in 2017, they launched an initiative looking at banking made easy. And it was an initiative to help incumbents not be restricted by regulatory frameworks and stuff. And that it was to reduce that regulatory friction was the opportunity. But in 2018, they really changed. They opened up some initiatives to change the foundation of financial innovation for Hong Kong, the infrastructure. So they launched the Open API initiative, so to allow internal IT systems and data for access to third parties that are outside the bank. They launched faster payments system, so really an infrastructure for instant payments 24/7 across all the banks, across all the other payment providers. And then the HKMA facilitated the launch of a blockchain-based trade finance platform, which was fully funded by a consortium of major banks in Hong Kong. So with that foundation in place, in 2019, they announced 8 virtual banking licenses, and they've all been operational now for about a year. So it's a great time to actually look at that. And just last month, they launched an initiative to grant a grant for proof of concepts for fintechs in Hong Kong and for international fintechs to try and do POCs with incumbents. So it's really trying to foster that innovation through collaboration with fintechs and the banks here in Hong Kong.
I also saw that Hong Kong has now been enlisted just in the last few days to participate in the CBDC trials.
Oh, easy for you to say?
Yes. So we know obviously Shenzhen has been a strong city participating in the Digital Yuan trials, but it's now co-opted Hong Kong. So that's pretty cool. Ben, I am going to call out you. You did a report back in 2018 called "Fool's Gold: Unearthing the World of Cryptocurrency."
Yep.
You were pretty bearish on Bitcoin at the time. It's now, I don't know what the price is today, but it was hovering in the mid 50s, mid 50,000s. I'm just going to check while we're talking.
57, 58.
57K. Do you think it's, what's your outlook now? Do you think it's going to go below 40K? Do you think it's going to go up to 200?
Look, when we released that report, we actually came up with 4 what you call more fundamental ways to evaluate something with no fundamentals. That was the irony of it. But everything pointed to a number that we were spot on. So we were actually the most accurate forecaster in the world, according to Bloomberg that year. We also did call the 2019-2020 rebound, but we did not think it would be led by Bitcoin. And if you look at all the furor going around and the FOMO, I know when all of my mother's friends and a couple of people that I haven't spoken to in years and Facebook are reaching out saying, should I invest? And my answer to this is it's worth whatever you'll pay for it. Just leave it at that. And whether I think it's worth X dollars or Y dollars is not, I think it fails permanently as a currency. I'm just going to say that.
Well, I think the key problem Bitcoin has is, if you're thinking of it as a currency, then the problem is Bitcoin has a design flaw, which is a 21 million limit, and that creates inflationary speculation. So it's never going to be a currency. It's digital gold. It's a crypto asset, but it has. You said, you're talking about the fundamentals without fundamentals, but, given that it is now 12, 13 years old, you'd have to say that Bitcoin has sort of created some fundamentals around cryptocurrency that, are interesting to look at for the 21st. But anyway,
the one thing I would say on that is anything related to crypto that is designed to support the trading ecosystem and investment ecosystem, I'm double thumbs up for. But anything around it to support a genuine use case, I'm very, very skeptical. And still, this many years later, you're right, 11, 12 years, show me the evidence where this actually works in a sense that it trumps what fiat can do. And I haven't seen it, and it's not going to exist for a long time, or if ever.
Good. Good feedback. Tell me about your latest report, which is called "Branching Off: The Outlook for Hong Kong's Virtual Banks." And by all intents and purposes, Hong Kong's a pretty small market. What, about 8 million population? With already some of the biggest banks in the world, like HSBC, there is there room for these 8 new virtual banks, the challenger banks that have entered the market?
Yeah, very good question. I mean, if you look at just the top 4 big banks here, so HSBC, Bank of China, Hong Kong, Standard Chartered, and Hang Seng, they mop up about 62% of the deposit share and about 54% of the loans and advances market, right? So they've really cornered a big part of it. But there's 172.
Is that fairly static? Does it go up and down?
It's been like that for quite a while. So the remaining 40% of the market is taken up by another 168 authorized deposit taking institutions here, right? That's a lot of the market, like sporadically and fragmented, taken up by many, many small players. Now, Hong Kong by no means is an underbanked market. It's not an unbanked market either, but it's very arguably a heavily underserved market. And for something with such a rich financial ecosystem, for the services of the incumbents to still be this poor, the response of the VBs, off the bat has been really quite favorable and positive for many of them. Now, the question is, can you sustain that momentum for coming years and overcome the original challenges? It's easy to put a nice deposit rate on there and attract customers, but you're talking long-term path to profitability, winning over customer hearts and minds, and doing something fundamentally unique, not just rolling out yet another banking service, right? Which is heavily, heavily commoditized.
And they appear to be not, it may be too early to say taking market share, but there's, the virtual banks are definitely gaining customers, right?
Well, for sure. I think there's been an initial very strong response. I think that some of the VBs have pretty good deposit balances for the very early few months they've been around. A few 100,000 customers all up. We're predicting probably 1.9 million customers by the end of 2025, which is about a quarter of Hong Kong's population. These are all very feasible numbers. This is the aggregate for all 8, right? This is not looking at one in isolation. So yeah.
Now the effect of the challenges in the UK market has been, by some accounts, and Matt, feel free to jump in here, pretty devastating for the UK banks. Certainly HSBC, Lloyds, RBS have all lost customers to the new challenger banks in the UK. But the bigger change has been they've really been forced to up their game in terms of customer experience. And so, I'll get your comments here, guys. Obviously, when you look at the likes of HSBC and Standard Chart, part of their digital platform, legacy is complacency. They don't update their websites very often. The internet banking, for HSBC has been updated twice in 20 years. And so what do you think the effect of the virtual banks will be in respect to raising those CX expectations like we've seen in the UK?
Well, I mean, I'll share a few thoughts. I'm sure Matt has a lot to say on this, but look, even just take it from the first experience of onboarding, right? In Hong Kong, if you wanted to set up a bank account, you would go with your ID, your address proof, you'd go to the branch, you'd sign off on a lot of paperwork. It'd take you a few days. If you're an SME, good luck. This could be a few weeks or a few months, depending on how complex you are or the nature of the business you're involved in. I did my VB bank sign up, and all the VB CEOs were touting it would be 2, 3, 4 minutes to sign up. And I was thinking, really? And it was super fast. And that's a fundamental change in your first experience with a bank. Now, the question is whether that experience can ride throughout your whole journey as a customer and everything can be so smooth and sequentially done. But that initial prima facie, I've set up my bank account, it's a big, big win. And it's forcing, I think, a lot of the other incumbents to rethink, do we need to get to this position? Because it's going to take a while. It's not that fast. The first thing they've done is cut all their fees, right? Immediately overnight, cut all their fees and said, well, we're zero cost, no minimum balance too. So we can price compete the hell out of you right here. But the experience part is really where they need to step up their game even more. Matt, over to you. I'm sure you have plenty to say.
Well, HSBC about 2 years ago launched PayMe and PayMe for Business. And I think their strategy, they're the only note issuing bank in Hong Kong. There's 3 others, but both Standard Chartered with Mox Bank and PCCW or Bank of China with PCCW have launched a VB license as well, in addition to their own bank. So they're looking at the virtual bank to join
so
it. And
HSBC hasn't?
They haven't, but they've done a lot of ecosystem work around the PayMe ecosystem and reaching out to both merchants and individuals, giving opportunities.
So they're trying to build a mobile wallet ecosystem, are they?
They have, and they've been very successful at doing that. But you look at what makes Hong Kong different is these aren't just virtual banks. It's not like the UK or Australia or the US in the sense of just giving you a slither of financial services like retail banking or even business banking. What they've done is each one is a consortium. There's only, I think, ZA, Zhong'an, the Chinese insurer, which has gone alone, but all the others are really consortium of companies. So whether it's a telco or whether it's retailers or whether it's China tech companies, they've all come together. You've got, some of the biggest names in China. So the likes of Tencent, the likes of Xiaomi, they've all come down to get involved, and financial, of course.
Yeah, I think it's definitely going to put the pressure on. Certainly has in these other markets. In terms of the virtual banks, you talk about potential for about a quarter of the bank community. Is that what you said previously?
Yeah, so we're saying about a quarter of the Hong Kong customers. We're saying about 4% of deposits. And we're saying a potential market revenue capture of about 19% by the end of 2025. Yeah.
Okay. And you, in the report, you look at sort of a different ways of measuring the market size, deposits, lending, revenue split, and market size in general. Where do you think the opportunity here is? Obviously, north of the border, in the mainland, we've seen the mobile wallet schemes, explode there. And, the end result of that with Alipay and Tencent WeChat Pay is they've captured a ton of deposit activity and a ton of lending activity. And so in China, I think it's fair to say that mobile wallets have surpassed the use of traditional day-to-day bank accounts based on a debit card or a passbook. I think it's about 78% of the population are on a mobile wallet today. But so from a behavioral perspective, in China and, what we're seeing globally with the take-up of wallets, I've sort of characterized this as the smart bank account wars, right? Is that these wallets that add, experiential elements, contextual elements, particularly around credits and savings, and because of the ease of use, are taking off. Chinese mobile wallets have done in 2020 2x the volume of transactions of the total plastic card load across the planet. And so already you could argue that mobile wallets are the most abundant bank account globally as compared with a bank account you get from a bank. So experientially, put your futurist hat on 5-10 years out with these virtual banks in the market, with the Chinese mobile wallets in the market. What do you think it's going to be like in Hong Kong?
All right. I think it's going to be evolving from what you feel is a bank or a wallet to just a super app. We always call it this. I think if I look at outside of Hong Kong, one of the banks that's potentially positioned to do this very well is Grab in Singapore.
Or Gojek, because they just bought a bank too, right?
Yeah, I mean, it's really just about being so close to your customer, right? It's just being part of your customer's journey around their savings, their spending, their investment decisions. And as long as your app or your functionality can weave into that, then you're in a pretty good position. The other thing is, we talk about the whole idea of a non-interest income-based model for these VBs. Because they can't really compete on balance sheet alone. It's not the smartest strategy. But there's so much parent company know-how from the Chinese parents in the peer-to-peer lending space that when they're scraping and using all of these alternative data forms, I think they can tap into that heavily underserviced end of the Hong Kong retail and SME market that are currently not getting funded by traditional banks because of their archaic credit scoring mechanisms, that they can start to plug into there without ramping up NPLs. And these are much higher margin, interest-based, income streams, and then use that to really understand the full spectrum of your customer spending patterns and data. Then the product, push and everything will make a lot more sense, as opposed to me still to this day getting phone calls from random telemarketers saying, "Would you like a loan?" Because that's how it works in Hong Kong.
But I don't,
Matt, go.
I don't look at this as just a Hong Kong market. I look at it the Greater Bay Area, and I think we're going to see a lot of mobility across the region. So when you look at the Greater Bay Area, it's going to be over 70 million people. So that's 10 times what just Hong Kong market is. And I think there's a lot of opportunities. And when you look at immigration and identity and everything, the Hong Kong government has actually looked towards Ping An as the solution for that cross-border kind of flow. So when you go to the border, you use facial recognition to actually get in. And if you have a Hong Kong bank account and everything, you can transport that across the region. And
I'm conscious of time, guys. Let's wrap this up. Ben, where can we get a copy or look at the report branching off the outlook for Hong Kong's virtual banks?
Yeah, if you just go to our website, quinlanandassociates.com, and then go to the Insights page, you'll see it as one of the tabs there, along with all of our other thought leadership, and freely available. You don't have to leave your email, so we will not hound you afterwards.
Fantastic. And we really should, get into the whole stand-up thing on our next show when we have you on, Ben. So
happy to, Brett.
But both of you guys, thanks for joining us all the way from Hong Kong, and thanks for the update on the virtual bank situation there.
Cheers. Thanks, Brett. Safe travels.
Thanks a lot, Brett.
You've been listening to Breaking Banks. I'm Brett King. We will see you guys next week with another episode of the longest running fintech radio show and podcast in the world, Breaking Banks. See you later. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.